Sceona, welcome to the New Property Show. Thanks for joining us.
Thank you, Rory.
Love to hear a bit more about what you do.
Okay, I'm an accountant, business accountant, deal with anything to do with accounting, taxation and advisory.
Fantastic. And not only obviously advising your clients on all different journeys in property, but you're actually going through it yourself right now. You're building your own owner-occupied property. I'm sure that comes with its ups and downs. Love to hear about it.
Very big ups and downs, mostly downs at the moment, except for the budget, which is blown out completely.
Right.
Time's blown out. It's been over 2 years and we're still at the tail end, but that comes with its own set of complications with the insurer not wanting to renew any insurance, which means I'm kind of stuck with a new policy that's going to cost me a lot of money for only a few months. So
insurers will unfortunately do that.
They will, yes,
but
absolutely.
We're getting to the end now. So when you're hoping to be in?
Hoping by October.
Fantastic.
Yeah.
So thinking back a couple of years ago, and it was a time to build, what would have you done differently, you think, over that journey?
Firstly, I probably would have waited a little bit because it was just post-COVID, or the first part of COVID in 2021, and I thought it might be a good idea. I didn't think we'd go into another lockdown. Then we had all sorts of delays, supply shortages, labour shortages, which just extended the time out, and obviously then the budget. So yeah, I probably would have waited and hired a really good builder. I tried to do it as an owner builder and got stuck.
That would come with its absolutely own challenges. So take us through that, trying to be an owner builder. What was what did you learn through that process?
I learned how difficult it can be to find really good people to do the job, to actually be able to have someone to rely on to get the job done in a really fast manner, and also the best quality trade. So doing it as an owner builder, you're kind of caught by who you know. And if they're not up to scratch or they don't coordinate properly with other trades, it just blows everything out. Well,
just think about the housewarming that's coming up real soon. So let's just flip now to your professional life, being an accountant. So dealing with people and advising people on all manner of property, which is amazing. And I think that we've really got three phases. When you're buying a property, you're holding a property, and then you're selling a property, and they all come with their own challenges. And I think that people can do that really well, or not get the advice and maybe not do so well. So starting at the purchase, you can buy in different entities, you can buy different asset classes, you can develop, you can do lots of different things. What are you seeing at the moment, and what conversations are you having around that with your clients?
So from when they decide to actually buy a property, they'll come to me and we'll discuss what they're trying to gain out of that. So what structure would be best for them. If they're doing a small development with other people, a certain structure will suit that. If they are an individual investor, then they may decide whose name, if they're a couple, the property might go in to have the best, say, tax advantages. So what I'm seeing at the moment is a lot of my clients in building and developing coming through, and things have just changed a bit. I've got one client at the moment who bought two side by side. Council are really dragging their feet with approvals. That client's now stuck with really difficult time with finance as well. So they're looking now at flipping one property and then developing the other property. So it's just challenging times for people in the property market at the moment.
How about residential and commercial? Are you seeing one or the other for certain people? Yeah,
absolutely. There are some people that like to have a mix of properties because just makes a good portfolio. Obviously with commercial you get a higher rate of return every year, and the tenant looks after the property, they do the repairs and maintenance, they operate their business from it, so generally it's well taken care of. And then residential, you generally get higher capital growth, so people like it for that reason. I've seen quite a few clients wanting to go into the commercial side because residential, with all the compliance that's going on at the moment, the annual compliance, keeping up with that, there's a lot of people wanting to divest their investment properties, and with agents that I'm speaking to, they're all saying the same thing.
Okay. Now, how about through the hold? Obviously, you've got how interest payments are treated. You've got depreciation. What are you seeing there, and what sort of advice and conversations you're having around that?
So the holding cost side is a big one, especially with land tax at the moment. I'm having a lot of conversations with everybody being a little bit caught out by the state government in Victoria changing the threshold down to 50,000. So that's a big concern for a lot of a lot of people that own properties. There are many clients that are looking at negative gearing if they hold properties in their own name. Many clients, the holding costs are a big consideration at the moment because interest has gone up so much. The other, compliance costs have all gone up. So during that period, you've got depreciation. They generally get certain items that may not be depreciable. They try to write off things that are actually should be depreciated. They try to write them off as repairs and maintenance. Right. A lot of people are very interested in depreciation, and you can get reports done so that you can write off the capital value of your plant and equipment as well as the capital cost of the asset.
Right.
What a lot of people don't realise is that when it comes time to sell the property, the amount that you've depreciated the asset actually reduces your cost base. So you will end up paying capital gains tax on that.
So get the right advice?
Absolutely, always.
And then so going to the sale then, obviously that brings up its own challenges as well when you want to get rid of a property and the implications of that with potentially GST or in what year you want to bring a sale into. Yep. So what are you seeing in that?
I'm seeing people always concerned about the capital gains implications and wanting to make sure that they can reduce them as much as possible. So that's a big consideration because it may mean that if there's not much equity in the property, that most of the profit ends up going to tax and they might decide to hold on for a little bit longer. Okay. So that's the primary consideration. With GST, if there's if it's a new development, a lot of clients actually get confused that they need to, if it's a new property, they need to charge GST and they haven't factored that into their calculations. Good. So there are always issues, and again, it's about getting the right advice around those issues.
So we're heading into some unusual economic times, I suppose, and which brings its own challenges for a lot of people. So if you can touch on what sort of advice you're giving to maybe businesses or people just to get themselves ready if we do, and I don't want to mention the word, if we do head into recession or at least, a bit of a downturn in the economy. Yeah.
Look, with my business clients, we are hitting difficult times. They're noticing that people are still spending, but they're stretching out the spending. So they're not as regular with their spend as they used to be. I always tell them that with every downturn, there's usually about 10 to 15 years of economic growth. Sure. So use this time to prepare, use this time to look at the way you're structured, look at your expenses, look at your costs, look at things like going to your mortgage broker to refinance because you might be able to get a better deal. Yeah, so by doing that, you can help to increase your bottom line. The other side of it would be maybe don't switch off some of your marketing so that you've got some good lead generation coming in. Sure. So just those kind of strategies to keep them afloat while we're heading into what could possibly be, a recession or close to a recession. Sure.
And I suppose if people are lucky enough to be able to take some opportunities that a downturn presents, that it could be a good time to look out for those too. So,
absolutely.
Sceona, it's been amazing to have you on the New Property Show. Thank you so much for your time.
Thank you, Rory.